When I first started learning about the stock market, I knew next to nothing about how it worked. I was intimidated by the jargon and the complexities of the financial industry, and I didn't know where to begin. So I started by doing my research and trying to understand the basics of what the stock market actually is. At its core, the stock market is a platform that allows companies to raise capital by selling shares of their stock to the public. When you invest in a stock, you are essentially buying a small piece of ownership in that company. As the company grows and becomes more valuable, the value of your shares also increases. On the other hand, if the company performs poorly, the value of your shares may decrease. But the stock market is more than just a place for companies to raise money. It's also a marketplace where investors can buy and sell shares of stock with one another. This creates a dynamic system of supply and demand, where the price of a stock is constantly fluctuating based on a variety of factors such as company performance, market trends, and global events. One of the great things about the stock market is that any company can be put on it for anyone to invest in. From small startups to multinational corporations, there are thousands of companies that trade on the stock market. This means that investors have access to a wide range of investment opportunities and can choose to invest in companies that align with their values and interests. The value of a company's stock can rise or fall dramatically, and there is no guarantee of returns. But by doing your research, diversifying your portfolio, and taking a long-term approach to investing, you can mitigate these risks and build a successful investment strategy in the stock market. Now let's talk about what I learned about the history of the stock market. The history of the stock market dates back to the 17th century, when the Dutch East India Company issued the first publicly traded shares of stock. This allowed investors to buy and sell ownership in the company, which helped the company raise capital to finance its trading operations. Over time, the concept of publicly traded stocks caught on and spread to other countries, including England and the United States. The New York Stock Exchange, NYSE, was established in 1792 and quickly became the most important stock exchange in the world, helping to finance the growth of American industry. Throughout the 19th and 20th centuries, the stock market experienced periods of tremendous growth as more and more companies went public and investors sought to capitalize on the opportunities presented by the market. However, the stock market has also experienced numerous crashes and downturns, including the Great Depression of the 1930s and the global financial crisis of 2008. Despite these setbacks, the stock market has remained an integral part of the global economy, providing a way for companies to raise capital and investors to build wealth. Today, the stock market is more accessible than ever before, with online trading platforms and mobile apps allowing anyone with an internet connection to invest in stocks and participate in the market. While the history of the stock market is marked by both success and failure, it remains a critical component of the global economy and an important tool for investors seeking to build long-term wealth. I will continue to explain everything in my next videos. Remember to like and subscribe. Let me know your thoughts with a comment below.